And hello, and thank you for joining us on Capital Markets this weekend. I'm Temple Ashaju. The Nigerian capital market traded mixed this week as the equity ended in a second consecutive week of red, and the fixed income secondary market continued to suffer from tight liquidity. On the regulatory front, we saw the launch of the Corporate Governance Index of the Nigerian Stock Exchange, preceded by the presentation of awards to some 437 individuals and 35 firms. Well, there'll be more about that and all of these other figures that we need to review on the program as all of that unfolds on the show this evening. But as always, let's refresh memories now with some stories from Newsweek. And first on the radar is Paintcom, which is a quoted company in the construction sector of the Nigerian Stock Exchange. Shareholders of that company, known as Paintcom, have agreed to a scheme agreement aimed at delisting the company from the Nigerian Stock Exchange. The decision was reached at a court-ordered meeting of the shareholders on Thursday following some unanimous passed resolution. Under the scheme, shareholders would be paid a cash consideration of 1 naira 15 kobo for every share held. And the stock currently trades at 59 kobo and has remained flat since October the 10th of last year. We'll move on now to other story. Africa's largest telecommunications provider, MTN, with headquarters in South Africa, plans to float initial share offering of its Ghana unit. The agency reports say that the company is preparing to raise as much as 2 billion Ghanaian cedis, or an equivalent of $447 million. In the meantime, there's no update from the MTN Group about when the share offering will take place. But initial reports last year set the MTN Nigeria IPO around June 2018. MTN Nigeria's public share offering was part of negotiations the telecom giants reportedly had with Nigerian authorities on hefty sanctions the company received in 2016. And a bit of earnings now, and the only one that came in yesterday. Oil and gas giant Total Nigeria on Friday released its financial year 2017 report, which shows a profit before tax of 11.80 billion naira versus 20.35 billion naira a year ago. Total's December 2017 year-ended revenue stood at 288.06 billion naira as against 290.95 billion naira in the base year. And at the board of directors meeting of February the 21st, a final dividend of 14 naira was proposed for the period, which saw a post-tax profit of a little above 8 billion naira. And now let's deal with the numbers at the fixed income markets to see how they all ended this week. We know the bond space was bearish this week as average yield advanced by some 0.05% to close at 13.74%. Yields on 12 debt instruments trended upwards, while the other 4 traded downwards. And in terms of the numbers you have on screen, that represents the figures that trickled in from the FMDQ OTC market yesterday, where a total deal of all the bonds traded at that secondary platform was put at 121 and valued at 19.90 billion naira. Let's move on to the Treasury bill sides now. With the CBN abstaining from OMO auctions until Thursday, demand resurfaced in the T-bill space, supported by a 29 billion naira maturity, as buying interest also continued through the week, driving yields 40 basis points lower. And for the T-bills numbers right there, 31st of May 2018, 15th of March 2018, and 28th of March 2018, all short-tenured bonds dominated investors' interest with total deals of 423 and 114.97 billion naira from investors yesterday. But before we leave the fixed income market, the federal government through the debt markets this week held a bond auction through the Debt Management Office, where a new 10-year instrument, namely February 2028, worth 50 billion naira was issued at a coupon of 13.98%, while an equal amount was reopened in the FGN July 2021 instrument at a marginal rate of 13.70%. Now let's look at what the equity numbers look like for this week at the Nigerian Stock Exchange. For the third consecutive week, the Nigerian Stock Exchange closed in negative territory, with the NSE All-Share Index shedding 0.61%. Consequently, the year-to-date return closed at 11.32%. And similarly, the market volume and value declined by 31.35% and 22.15% respectively. If you take a look at the gainers chart, you should find the top performer for the week being Livestock PLC, advancing by 19%, while on the flip side you have corn oil depreciating 18.32% to lead the laggards board. And in terms of the sectoral performances, the banking index was positive, followed by insurance index, which trickled in at 1.24% in terms of performance. The consumer goods index, oil and gas index, in spite of total earnings, which came in very late on Friday, as well as industrial goods index, were all negative. Industrial good index negative by 0.49%. And for the corporate governance index that was launched this week, it ended 0.27% northwards. Now let's look at the unlisted securities markets, which represents the NASD OTC. There you have the unlisted securities index, the USI for short, coming in at 664.76. It advanced 1.34% this week, and from moving away from the 655.96 points it recorded in the previous week. Market capitalization was also positive by the same margin, coming in at 449.86 billion naira, as against the 443.90 billion naira recorded in the preceding week. And one of the major stories at that side of the market this evening is from CSDs, which is the Central Securities Clearing System, representing the depository of the Nigerian Stock Exchange. CSDs shares are off to a bullish start in 2018, having risen roughly by 48% so far in 2018. The sharp year-to-date rise reflects investors' strong earnings growth expectations to further improve the fundamentals of the company, while CSES total market value has grown from its year open of 53.7 billion naira to a close of 79 billion naira as at Friday, yesterday. The performance can be attributed to three-year strategy plan unveiled last week by the new management under Mr. Haruna Jallo Waziri.